Welcome back, everybody. This segment is what I used to call the 5-column chart. 5 columns, but we'll just call it tax code from the ground up. What we're going to discover, is that when you start on the ground level with your feet firmly on the ground with only statute, we have a certain way the tax code is to operate. And what we have after the elements of misenforcement and willful misenforcement of the code, ignoring certain definitions, sometimes they'll write a regulation to provide them. Other times they'll simply misenforce a statute without any permission in regulation. So we have a pattern of misenforcement. Some statutes they'll simply forgo and forget about. Some statutes they'll write a regulation to destroy them. And some statutes they'll write a regulation that broadens it. Okay? So what we have is 16th Amendment. Congress can lay and collect income taxes. Doesn't that mean that Congress is the one that's going to name the subject of the tax? If they can lay the tax, isn't it Congress that's going to tell you who the tax is supposed to be imposed on? Makes perfect sense. If Congress can lay and collect the tax, it's Congress that's going to tell you which subject the tax is to be imposed on. Who is the subject of this tax? Well, you've heard me say throughout, I'm the Section 1 citizen, 1.1-1C. Any person born or naturalized in the United States and subject to its jurisdiction, that's me. Congress can lay and collect an income tax on me. Okay? And Congress is the one with permission. Congress names the subject of the tax. So here we have Congress naming a subject of the Chapter 24 tax in their definition of employee, federal public servant. For the purpose of this chapter, the term employee includes any officer, employee, or elected official of the United States, a state, political subdivision thereof, or any agency or instrumentality of any one or more of the foregoing. That's not me. That's the subject of this tax. It's the federal public servant. Chapter 21, FICA. Congress has named this subject, the Puerto Rican employee. It's an income tax. 1402B in self-employment income, Social Security on self-employment earnings. Congress has named the subject. It's the citizen in 1402B. Same guy as over here. Citizen of the possessions. If you remember the Social Security segment. And over here, 1.1-1C. 1 point. That's a decimal, isn't it? Do statutes have decimals? No. Regulations do. Who writes the regulations? Congress? You mean Congress didn't even name a subject in Chapter 1? The Secretary of the Treasury has named me subject? I thought the 16th Amendment said only Congress can lay and collect income taxes. What's the Secretary of the Treasury doing naming a subject of the Chapter 1 tax? I object. So what we have is a tax code that doesn't even have a subject in Chapter 1, when it does in the other chapters. The Puerto Rican, 2 and 21. The Federal Public Servant, Chapter 24. Clearly, they named a subject. Chapter 1, citizen is mentioned only in regulation. U.S. citizen. So let's get rid of that right there. Right there. 16th Amendment has not been followed. Only Congress can name the subject of a tax. Now we have a tax Chapter 1, Tax Code Chapter 1 that doesn't apply to anybody because no subject is named in Chapter 1. Congress did not name a subject of the Chapter 1 tax. That's the first dynamic of the code to remember when you're talking jurisdiction or limitations of authority. Congress did not name a subject of Chapter 1 tax. Who on earth would be subject to Chapter 1 if it doesn't have a subject? Chapter 2. Remember, we got a regulation there, 1.1402A-2A, defines self-employment income. It says to figure this tax, use Chapter 1 provisions. Suddenly, the Puerto Rican that's implicated in another chapter goes to Chapter 1 to figure his tax. Wasn't that easy? Same with a Puerto Rican that pays FICA. Section 83 applies to those wages. He goes to Chapter 1 to figure his taxes. Chapter 24, federal public servant. It's an income tax. Section 83 applies to those wages in 3401A. He goes to Chapter 1 to figure his tax. You have to be implicated as a subject of an income tax somewhere else in the code. Then you go to Chapter 1 to figure it. If you're the federal public servant, Chapter 24, you stay in this chapter, take a Section 31A credit, and pay the tax increments imposed by Section 1, our graduated income tax. If you are a Puerto Rican, you go to check the Chapter 1 to figure your taxable income, but then you go back to your chapter to pay the rate of tax imposed here as Social Security. This imposes a different rate. This imposes a flat 7.65% FICA and 15% right here. Okay? So, you have to be implicated in one of these as a subject under one of these income taxes, Chapter 2, 21, or 24, to figure an income tax. You go to Chapter 1 because the income is profit, and therefore it's only the excess over your cost. Cost isn't determined in either of these chapters. Cost is determined over here. There's no reference to cost in those chapters. Cost is over here. So you have to be implicated in one of those chapters to come over here to be taxed under Chapter 1, because the definition or the subject named here was in regulation. We did away with that because we know the Secretary does not have that authority. Congress may lay and collect taxes, not the Secretary. So what we have is a generic Chapter 1 that will allow the employee, the federal public servant, to come over here and get a Section 31A credit. Okay? He's the one that's eligible, 1.31-2B. Okay? But he still gets Section 83 protections because 83 applies to those wages. So what we have is a tax code. Chapter 1 doesn't apply unless you're implicated in one of these other chapters. You figure Social Security with Chapter 1 provisions, but you pay this rate. You figure Chapter 24 taxes and you pay the Chapter 1 rate by crediting your Section 3402 tax, W4, against this tax imposed by this chapter through Section 31A. That's the code from the ground up. I'm starting without any regulations. I'm showing you what statute says, and I've excluded us up here to start with because regulations don't exist yet. We're looking at the law. Now, over here, and this is P&A, Procedures and Administration. Okay? A whole bunch of stuff took place over here. What I'm going to show you first is what we have. Okay? Let's start right over here. 6201A is Assessment Authority. And it says the Secretary is authorized and required to make all inquiries, determinations, and assessments of all taxes imposed by this title, parentheses, including fees, penalties, additions to the tax, etc., which have not been duly paid by stamp at the time and in a manner provided by law. Which what? Which taxes? No. I'm talking about just the language of that statute. The Secretary is authorized and required to make all inquiries, determinations, and assessments of all taxes imposed by this title, which have not been duly paid by stamp. Which what? Which taxes he can assess and make determinations and inquiries about. That's which. So what they got, he's authorized and required to make inquiries, determinations, and assessments, and then way at the end of the paragraph, they say, which have not been duly paid by stamp. Which what? Which taxes we're talking about. That's what. Which taxes? Which have not been duly paid by stamp. Those taxes. Do I pay my taxes by stamp? Is FICA a stamp tax?
No.
Who is stamp taxes?
No fault.
That's the first guess. But you go to the definition or to the index of the code, stamp taxes, and they say chapters 43, the 4300s and 4400s, foreign insurers and casinos, which is very odd, but I'll run with it. Okay. So I just know that's not me. Whoever does pay their taxes by stamp, that's not me. So what I have is a statute that says they can't assess me. Also, I have a, let me see, 6671B is in subchapter 68B. And it's the definition of the term person for the purposes of the chapter that authorizes a frivolous filing penalty, frivolous income tax petition penalty, under 6702 for frivolous filing, 6673 for frivolous income tax petition. Okay? 6671B limits the definition of the term person. It says, for the purposes of this chapter, the term person includes any officer or employee of a corporation or member or employee of a partnership who, as such officer, member, or employee, is under a duty to perform the act with respect to which the violation occurred. Now, they'll be the first ones to tell me my duties arise from having been the recipient of gross income, right? You receive gross income, you have duties. They don't say you are an employee or member of a partnership of a corporation, you have duties. They say you receive gross income, you have duties. Those are two different people. One person's duties arise from the fact they were an employee or member of a partnership or officer of a corporation. My duties come from having received gross income. That's not me, so they can't penalize me. 7343 is the definition of the term person in 75, Chapter 75 on crimes. It's the identical definition. Do my duties arise from the fact I was an employee? No. It arises from my receipt of gross income. That's not me either. So they can't assess me or penalize me. And so what I'm doing is I'm chipping away at their authority. Okay? 601.106F1 is a regulation that says an exaction by the government is a violation of due process. Accordingly, appeals officers must hew to the law with indifference as between the government and the taxpayer, which means anybody has to, because it would always be a violation of due process regardless of who performs an exaction on you. So I want that in there because it's in procedure administration. Now, 7.8, oh, by the way, 3640 of the 1939 Internal Revenue Code, 3640 is the predecessor of 6201A. That's why that's up there. So we have a statutory basis that says stamp tax only for assessment authority. Now, 7852A, separability clause. If any provision of this title is held inapplicable to any person or circumstance, that provision and the rest of the title's applicability to other persons or circumstance shall not be affected thereby. What that says is you can't use old case law against me.
Which one?
7852A. I think it's in your provisions. Okay? And you can tell me how well I did on the quote. If any provision of this title is held inapplicable to any person or circumstance, the remainder of the title and that provision's applicability to other persons or circumstance shall not be affected thereby. And I'm saying you can't use old case law against me without violating this law right here. This law says you can't use old case law against me. It's provision number 23. Okay? Isn't that a simple challenge? If any provision of this title or the application thereof to any person or circumstances is held invalid, the remainder of the title and the application of such provision to other persons or circumstances shall not be affected thereby. Meaning every case, I feel, meaning every case is de novo. You can't use old case law against me. Chances are in a stack of books that weighs 40 pounds, they didn't use the same argument as me. It's only fair that you shouldn't use old case law against me, considering the volume of the code. Okay? So that's why 7852A is up here. Note 7852E.
That just wipes out stare decisis for tax law.
Yes, that's all, but it's one of their biggest tools. Okay? I'm taking another piece, another brick, aren't I, with that statute. All they have is old case law. That's all they've got. They can't get into statute.
Courts have held.
And so I say you can't use old case law under the statute, that's all. Now, there was an author, Carl Granzi, came out with a course called Sledge-O-Matic some years back, 9-segment course. And segments 3, 5, 7, and 8 were based on a provision of FOIA, which is 5 USC 552A, saying that use these constructive notices and Freedom of Information Act requests to amend the record. Send these to the IRS, and they have to acknowledge you within 10 days that they've received it. And within 30 days, they either have to amend the record per your request, or they have to give you the name of the official you can appeal their decision to not act to. Okay? And if they don't comply with this, you can get $1,000 out of it. $450 course, Sledge-O-Matic. 4 segments, 3, 5, 7, and 8 were based on that strategy. 7852E says those provisions of the Freedom of Information Act shall never be applied to the existence or possible existence of any tax liability under this title. And he wrote a whole course about it, and hadn't even read the code far enough to learn that those parts of FOIA don't apply to the code. Okay? Anyway, this reminded me of it. 7852A is the severability, but 7852E says those shall not be used, and we got a whole course. So anyway, that's the type of person I was telling you about when, they want a silver bullet. They got one statute that kills the whole code. I did it the hard way. So anyway, 6053, fascinating. It doesn't require 61A tips to be reported to the employer. Only 3121A tips, 3401A tips, and I think 3300 is the Railroad Retirement Tax Act tips. Well, I'm not a railroad retirement person, I'm not a federal public servant, and I'm not a Puerto Rican. So it doesn't require 61A tips to be reported out of Chapter 1, only the others. They told me in writing, your tips are 61A gross income. I'm going, why the hell are you finding me for not reporting to my employer? There's no requirement. This is what got me into tax law. They came after me for tips I didn't claim as a high-volume bartender. I said, this is a lie, the first place I went. Anyway, next one, 6065, requires that all forms filed by the public be signed under penalties of perjury when indeed the forms W-2 supplied to the government by the employers are not so signed. Should they be admitted as evidence? I don't feel they should be.
Which section is?
6065. 7701A, 9 and 10, state in the United States. 7701 is definitions. A is United States and state, which says the possessions, essentially. But 701A, it says, unless contrary intent is manifest. And that's where every judge is going to run to and say, contrary intent is manifest, goodbye, see you later. Next. And they're just going to steamroll right through anything you do in 7701. And so I don't even go there for my challenges, even though there are some valid arguments under these definitions. 7701C is the one that says, includes and including, when used in definitions in this title, shall not be construed to exclude things. And so rather than argue the term includes, it goes straight up against that statute, I argue the term definition and say includes doesn't matter. And then 7621 and Title 4, Section 72. Very important. 4 USC 72 says, all offices attached to the seat of government shall be exercised within Washington, D.C. and not elsewhere, unless expressly authorized by law. Well, the Secretary of the Treasury is in full enforcement authority over the IRS and the enforcement of the tax code. Sections 7801 and 7805 say so. Well, 4 U.S.C. 72 says the office of the Secretary of the Treasury and all the other offices have to have permission to leave D.C. I've had this in court twice. They can't talk. The closest they can come to this is Section 7621. 7621 says the President may, well, that's not the Secretary of the Treasury, is it? The President may combine into one district 2 revenue districts, or he may split one into 2 districts for convenience. That's not authority for the Secretary of the Treasury to leave D.C. Excuse me. They can't talk about this statute. They have no authority to leave D.C. Okay? What I'm doing is I'm building a framework here. This is a generic chapter. I'm named in regulation. Let's get rid of it. Puerto Rican. Possessions. Federal public servant. Assessment authority is limited to taxes paid by stamp. I don't have to report these tips. Oh, this is a beauty. 6413C. This is cool. 31A over here, so you can get this credit. 31B talks about Social Security in Chapter 1. And then it says, the Secretary can write regulations under 6413C authorizing a credit for FICA. Go to 6413C, and it says if you have more than one employer, you can get certain credits for your FICA. No one with more than one employer in this country gets credits for FICA. No one. And here's a statute that authorizes it. Flat out. Okay? So what I'm doing is I'm showing you all these protections we got, and then I'm showing you what they did to get rid of them. Gee, I'm just about done over here. Okay. We're ready to start. Okay, 602.101. Very good. It is not a paragraph of regulation or language or text. It is a list of OMB control numbers, Office of Management and Budget Control numbers, assigned pursuant to the Paperwork Reduction Act, Public Law 96-511. which says all requests for information from the government have to bear one of these numbers. And we find in there the OMB number 1545-0067, which is not the Form 1040. It's the Form 2555, Foreign Earned Income. And we find that form prescribed for 1.1. That's my regulation up here, 1.1-1C. And for 1.1, ... and then it enters this number. That number's right there. So, regulation, that means it has to be complied with. The law is perfect. We've got to comply with everything. This regulation lists for my citizenship only the Form 2555. I have to violate this regulation to file any form other than this one, because this regulation has to be complied with. Okay? Now we have our framework. Here's how the code exists. Generic chapter, you have to be implicated over here. If you're one of these citizens in the possessions, you come over here, Chapter 1 figures your tax, you go back here to pay this rate. If you're a federal public servant, you do the W-4 form all year long on only your excess, because 83 applies there, it applies here. So all these people would only pay taxes on their excess, the extra contractual compensation they receive, but they come here to figure it out. And then the Chapter 24 employee stays here, takes his 31A credit, and pays this rate of tax imposed by Section 1. These people come over here to figure their tax and go back here to pay this rate of tax. None of them, there's only one of them that's going to end up in a foreign earned income situation, and that is the federal public servant, because he ends up under Section 1, pay the tax, whereas these two people don't. This guy will pay a Section 1 tax that's equaled out by the W-4 withholding he did. These two do not pay a Chapter 1 tax, so they won't end up in Section 1. They don't file the foreign earned income form, they're Puerto Ricans. But an American federal public servant that ends up under Section 1 files that Form 2555. So we have a tax code that this doesn't apply to anybody unless they're subject under one of these chapters. They come here. If they're one of these Puerto Ricans, they figure their taxable income, but go here to pay the tax on it. If it's a federal public servant, they stay here, and they come over here and they stay here to pay this tax. And they have no assessment authority except stamp taxpayers. They can't penalize me, they can't assess me, and they can't charge me criminally. They can't force me into tax court to pay frivolous tax court petition, frivolous filing of a tax return. These are the existing parameters. They can't do any of that to me. I'm not that person. And I'm not this person, I'm not this person, or this person, and that was a regulation that mentioned me. Congress has that authority. So that's the way the tax code exists. Nobody in the United States is even named as a subject. Puerto Ricans, Guam, American Small Virgin Islands are, federal public servants are, Chapter 22, 23, Railroad Retirement Tax Act, and the Federal Unemployment Tax Act. Okay? Those aren't deducted from our paychecks. Okay? Great. So we have these four categories. That one started out as generic. The only reason this is here, 27 CFR 70.150B, that's a regulation that defines fair market value in terms of an arm's length transaction, just like I did. Okay? So, how are we going to fix this? I'm the Secretary of the Treasury sitting back. Look at all these rights these people have. Oh no, that's out of line. We're in this to make money. What do we do? I need ideas. You're my team of writers, and I need you to write regulations and tell me where I can get out of this mess. It's got way too much protections in it.
Let's go to John Hopkins and take a creative writing class.
Let's get a think tank together, whatever. They wouldn't allow you through the door at John Hopkins if this was your goal. Okay, so what they do is they say, well, about this Title IV, Section 72, we're just going to point to 7621 to say we got the authority to leave D.C. Okay, so we're going to leave D.C. and now we're going to come out into the public. I want you to name the public or the U.S. citizen as subject to this tax. Forget the 16th Amendment that says Congress names the citizen. I'm naming one. I'm going to name the United States citizen subject to this tax. So now Chapter 1 is no longer generic. I got a subject. I named the subject for this tax. I'm the Secretary of the Treasury. Secondly, write a regulation for this definition of citizen. Well, we saw that regulation, didn't we? He who is a non-resident alien shall not be considered to be blah, blah, blah. Give me a break. By the way, 1402B-1D, which on the list, what number is that? 1402B-1D, 1.42. Number 42 on the list, great. And again, I want you to run 10 miles in this regulation when you write it, because we need Social Security imposed on the self-employed in the 50 states too. So when you write a regulation to explain this statute here, definition of citizen, I want it to confuse everybody. And they said, oh, we can do that. Let's look at what we got here, boss. A non-resident alien individual never has self-employment income, while a non-resident alien individual who derives income from a trade or business carried on in the United States, Puerto Rico, Guam, American Smaller Virgin Islands may be subject to income tax provisions on such income. Such non-resident alien individual will not be subject to the tax on self-employment income. I got an idea. Why don't you just say he's a Puerto Rican? He's not subject to this one, but he might be subject to some other. It can only be this one. Okay? So, they want to write a regulation under this one to cloud the issue. And I'm just going to put one point this. So they wrote a regulation to cloud this definition even further. It was in statute. And then they said, write a regulation that adds this one to the Chapter 1 tax. So we can do it both on the same citizen. And so they wrote this regulation that says, this tax in Chapter 2 shall be added to the tax imposed by Chapter 1, Section 1 and 3. And that's in Chapter 1. This shall be added to this one. Can't do that. Not the same citizen. And another thing, this guy isn't even named. They came up with this after they named us. They wanted us subject to this. First they made us subject to that, Chapter 1, and then they said add this to it. So that's how they got Chapter 2 self-employment added to this guy. First they put this guy in the chapter, me, and then they said add this tax to this guy. So this implication gave rise to this regulation. So add them together. Because normally, because this is a generic chapter, tax wouldn't exist here to add it to. Would it? You have to be a subject here and come over here and figure your tax. It doesn't even exist until you are this person when this one is saying add this to this one. You can't. This one doesn't even exist until you come over here. So I'm trying to think of a more plain way to say that. Add this one to this one. If this chapter doesn't even have a subject, what is there to add it to?
Zero.
Right. So they named the subject. Now that we've got a subject over here, let's add another tax to him. Not only this chapter, but this chapter's tax. So they wrote this guy, created a subject for this one, and said lay this on him too. Okay? Now, Chapter 21. We got this definition of citizen. State in the United States. I want you to write a regulation that incorporates the term includes, because the definition of citizen in 3121E doesn't use includes. And I need that. It's one of my tools. It allows me to enforce the definition as if it were an inclusion. So write a regulation. 31.3121E-1B says the term citizen includes blah, 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 Puerto Rican. So we got a regulation now that allows us to enforce it as an inclusion. Over here we got 3401C, definition of employee. That's too restrictive. We need to get this W-4 form over here against this Chapter 1 citizen that we named, because we're the Secretary of the Treasury, we did this. And I want that W-4 form imposed on him. So they write 1.83-6 that says, bring the W-4 form over here. And then they say, this definition, it uses the term includes. Let's write a regulation that really broadens it up. So they write 31.3401A-1A, which is consistent. It says federal public servant, just like this statute does. Then B says generally. Well, what does generally have to do with the definition of employee that's so limited in 3401C? This regulation, B, right here, says generally the employee-employer relationship exists when, well, we all know that. And generally has nothing to do with this regulation, or this statute, that limits the definition to federal public servants. So they wrote a regulation that includes everybody through a generally definition. Well, this doesn't call for a general definition. A is consistent with this very narrow one. B says generally. Well, we'll go to the dictionary for that, thank you very much. But that's the one they use to say, everybody. Okay. Curious. Oh, I'm sorry, 3401C, A and B. That's the one I was looking at. This one makes a curious statement when it says, unless evidence to the contrary exists, the wages received shall be deemed to be the fair market value of the services performed. Well, if this imposes a tax on the entire amount, what the heck are they talking about fair market value of the services for? If it's imposed on everything, it doesn't matter what the value of the services was, does it? It mentions fair value because Section 83 applies. Okay, that's why they mentioned fair value in this regulation. Is because you have to take it into account. It's an income tax. So, I got a general definition here that disposes of this limitation. Now, anybody seen 3402N? It's not on the list of provisions. I'm going to read it for you. And what it does is it outlines perfectly that the filing of a Form W-4, even if you weren't, or if you are that employee, it's voluntary. 3402N says, I'm getting close here, 3402N, here we go. 3402N, oh my goodness, where are you? Yeah, there it is. Employee incurring no income tax liability. Notwithstanding any other provision of this section, an employer shall not be required to deduct and withhold any tax under this chapter upon a payment of wages to an employee if there is an effect with respect to such payment, a withholding exemption certificate furnished to the employer by the employee certifying that the employee incurred no liability for income tax imposed by subtitle A last year and anticipates that he will incur no subtitle A liability this year. So if I certify that I did not have and will not have a liability, they shall not deduct and withhold. That's what Congress just said. And the Secretary of the Treasury said, we can't do that. That's too voluntary. Write me a regulation, and I mean bury it, because we're going to destroy that statute. So they wrote 31.3402F2-1G5, 2, and 3, which say, if the IRS inquires and finds out that it's inaccurate, we can instruct the employer to withhold the maximum amount till that employee bends over. Okay? These two regulations. Number 2, these two little I's with dots, and 3. Those two paragraphs, subparagraphs of this regulation destroy this. Do you see this framework? They're playing tricks in each category to get away with it. That's all I'm doing, is I'm going topic by topic, tax by tax, brick by brick. Okay? So 3402N says it's voluntary. 31.3402F2-1G5, 2, and 3 say otherwise. We can do what we want to that W-4 form. Okay. Now, the 602.101 argument for the foreign earned income form, I briefed this. It's been to the Supreme Court 3 times. No one can talk. It's a regulation that has to be complied with. And we have, I think it's 1992 and 93, we indeed have an entry for 1.1-1, and then ... and then it enters this OMB control number. Well then, in 1994, this regulation was revised. And it no longer even has an entry for 1.1-1. It's gone. It starts with 1.23, ... and then a certain number. The 1.1 line is totally gone now. So they don't even mention that form under Section 1 now. Treasury Division 833 said we're moving this to avoid misinterpretation. But they didn't explain what the two interpretations are, the right and the wrong one. They just said we're moving this to avoid misinterpretation. They didn't say we're changing the requirements, we're deleting them, we're amending them, we're altering them. They said we're moving them. And they moved the 1.1-1 way over in the back of the regulation under 301.6201. Or I'm sorry, wrong one. 6012. Requirement to file. 301.6012 in 1992 and 3 went like this, okay? It's got several forms listed under that one. None of those were the foreign earned income form. In 1992 and 93, 602.101 did not list the foreign earned income form under the requirement to file under 6012. It listed it instead under 1.1. Then that decision came out and said, let's move it. And they moved it from 1.1, they just erased that, and stuck. Now you find under 301.6012 listings for OMB control numbers, you do find this number. Okay, so all they did was move it. That's where it went. This is the decision that tells you that. Okay? So, when I briefed this, I included 3 copies of 602.101. 1992 copy, and I circled the foreign earned income form number in there. The 1993 copy, circled the foreign earned income form argument, and then included 8335, turn that page, and then you come to 1994 photocopy where 1.1 is gone. You go to 6012 and you find, now we got this number in 6012. All they did was move it. It's still the same requirement. Okay? There's no getting out of that.
They just obfuscated it?
All they did was move it.
Hit it.
That's all they did. And so, that's all they did. They didn't change it. And this Treasury decision will tell you that. Okay? So all they did was shuffle it. So I briefed it with those 4 exhibits. 3 copies of 602.101 and inserted 8335. That one-page Treasury decision says we're moving this to avoid misinterpretation. So it's still the same requirement. I can't file a Form 1040 without violating 602.101, which only allows me to file the Form 2555. That's the argument. Oops. So here I have a requirement to only file offshore. So there's another thing the IRS does. So what they do, starting again, first we're going to name a citizen right here. We're going to do it. Screw Congress. 31A credit, we're going to give everybody that, and we're going to ignore the limitations on authority right there. These 2 embrace all property as a cost. Not anymore. We won't talk about it. If you do it, we'll penalize you. Ignore the whole Section 83 equation. Section 1001, 1011, 1012, Section 212. They don't apply to the laborer, and we wrote a regulation to bring that W-4 form in. Chapter 2, let's ignore it. Write a regulation that adds the 2 taxes. Chapter 21, definition of employee doesn't use includes. Write a regulation that does use the term includes. Now it's an inclusion. Chapter 24, federal public servant, use the term includes. Write a regulation that says, in general, generally, everybody's an employee. Okay? Then we got this voluntary nature of the filing of a Form W-4. Write a regulation that says it's not voluntary at all. Okay? And let me see. This one is the one that mentions fair value. Let's ignore that. Fair value doesn't count. We're going to tax the whole paycheck. Okay? Then over here, let's ignore 602.101. It's just the Office of Management and Budget. Who gives a damn? Okay? Forget the foreign income form. If they file one of those, penalize them. But how do we penalize them? Because they're not defined in the term person in the chapter that allows frivolous filing penalty. I just ignore that. It says includes. Term person includes. We'll just enforce that as an inclusion. Well, even if we do that, we can't assess them because they aren't stamp taxpayers. Well, I'll tell you what, ignore 62018, write me a regulation under it that says we can assess all these taxes. So they wrote a regulation that says instead of the Secretary is authorized and required to make all inquiries, determinations, and assessments of taxes which have not been duly paid by stamp, Regulation 301.6201-1A says the Secretary is authorized and required to assess all taxes imposed by this title. They don't even mention the term stamp, okay? So we got a regulation here. Now we can assess people, we can penalize them. And this definition of a person in the chapter on crimes, it uses the term includes. It's an inclusion now. Okay? So let's charge some people. 2 employers, forget that. No credits for FICA under 6413C. 601.106 we must hew to the law with indifference. Okay, that's out of here. We're making progress. Now, 6201A, stamp tax authority, we got rid of that. All right, we're making progress. We can assess, we can penalize, we can charge people with crimes. We don't have to give them credit when they have 2 employers. We don't have to hew to the law with indifference. In fact, if we did, we wouldn't have jobs. Okay. Now, I can't use old case law. Forget it. That's all I got at my disposal. I have to use old case law. I got nothing without it. 6404B. Funny thing, I'm a subtitle A, taxpayer. Title 26, divided into subtitle. Subtitle B is estate and gift taxes. Subtitle A is income taxes. Subtitle C is employment taxes. Subtitle F, procedures and administration. Subtitle A, chapters 1 through 6. That's me. Even if I was the Puerto Rican in chapter 2. I am a subtitle A taxpayer, lo and behold, these liens and levies are causing such a financial hardship, I need a claim for abatement, please.